Hi, I'm Peter Jones, Chartered Surveyor, author and property investor. I'm sometimes asked, do I buy properties for capital appreciation? And the answer to that is, well, yes and no. First and foremost, when I buy a property, I make sure that the cash flow is there. I look at what it's going to cost me to hold the property. I look at the amount of rent that's going to come in. If there's a big enough margin between the two, then I know it's probably going to be a runner. What I would then do when I'm doing my due diligence is I'd work through the figures. And this is basically my buying criteria, which often surprises people because they imagine that I may have a particular gross yield I'm aiming for example. No, what I look at is, if I'm going to buy this property, can I add sufficient value to be able to refinance it? If I can refinance it, can I get all or most of my money back out? And if I'm getting all or most of my money back out and paying a higher mortgage on refinancing, will I still have a positive cash flow? If it ticks those boxes, then that's why I'm going to be buying the property. Am I buying it for capital appreciation? No, not really. But if I told you that I wasn't ever thinking of capital appreciation, that wouldn't be strictly true, because of course I've got one eye on the capital appreciation. I don't want to buy a property today and in 20 years' time find that it's going to be the same value. Now, I have to say I think that's very unlikely anyway, because we live in an inflationary economy, and the Bank of England are even charged with making sure that we have a certain amount of inflation. And if there's a certain amount of inflation, then it means that property values are going to increase, surely. So in 20 years' time, I'm going to be okay. But if I can do all of that and buy in an area where I know there's a greater chance of capital appreciation, then I will do that as well. So first and foremost is cash flow, making sure I can refinance, making sure I can get my money back out, and making sure there's still cash flow after doing that. But if I can buy the property in an area where there's going to be capital appreciation and hopefully substantial or significant capital appreciation over the next 10 or 20 years, then so much the better. And of course, I will be thinking about that when I buy as well. Well, I hope you found that informative and inspirational. And if you want help in property, please do come over to my website, www.thepropertyteacher.co.uk. Loads of great resources there, including my blog. There's loads of free videos, loads of great articles. There's free reports to download, including Learning with Peter, where you'll be able to access resources like my video courses, like my ebooks, including my home study course, the Successful Property Investors Strategy Workshop, which I've literally sold thousands of copies of, which takes you through how I started in property, literally with none of my own money, but how I was able to build a portfolio of £2 million worth of property in just 4 years. I'll show you everything that I did right so that you can do the same. And I'll show you everything that I did wrong. I'll tell you about all of my mistakes so that you can avoid them, so that you can progress in property far more quickly than me. Until next time, here's to successful property investing.